Even as many major stock markets opened the year near record levels, they carried on to reach new highs by the mid-year point. But can this momentum continue into the second half of 2024? We see several reasons to stay positive on stocks. First, this rally has been supported by strong company earnings. Earnings growth estimates have been rising steadily across developed markets since the beginning of 2023, and the global earnings revisions ratio has climbed back into positive territory, which means more companies have seen earnings estimates upgraded rather than downgraded. Second, we believe interest rate cuts and improving economic activity in Europe could extend the rally to more companies. We see opportunities in some economically sensitive areas of the market that have recently lagged, and especially those sectors that have earnings support from long-term trends such as decarbonisation, demographic shifts, and the rise of AI. The construction industry, for example, could be boosted by demand for more housing, as well as data centres to power the expansion of AI. Third, we see more attractive regional opportunities bubbling up. We are positive on Europe. Stock valuations remain attractive, earnings have rebounded, the economy is showing signs of life, and we see opportunities to invest in quality companies across a range of sectors. We also believe the UK is worth a look, especially smaller companies. These are on very low valuations and may benefit from potential rate cuts. The bottom line is, even after a strong run year to date, the outlook for equity markets is encouraging. This is especially true for stock pickers, as we see a supportive macro backdrop extending benefits to a broadening yet dispersed set of companies and regions.